Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Everyone checking in on SPY IWM QQQ on the daily and the weekly time frame. So we have an inside bar today on the daily time frame, and it really was a setup that kind of dictated the direction to be looking today with regards to yesterday. So what we had yesterday is a bullish reversal candlestick and a strong close. We knew the volume wasn't really there. The prove it indicator, bulls were not proving it with the volume. So we were a bit skeptical. We needed to see bullish reversal confirmation with the green day today. We saw the lower open starting the day, so we can head into the day saying, okay, if the bulls cannot break 234.57, the high of yesterday, they are not going to confirm this reversal candlestick, and the bears are going to have the upper hand. So we saw the high of the day get up to 234.49, 8 cents shy of that level, and then we started to see the bearish action come in. So that at that point in time, it was very clear that the lower high was set, and we should be looking bearish because the bulls are not going to be the odds. The longer it takes for the bulls to break that high the previous day to confirm that reversal candlestick, the more the odds increase that the bears are going to be able to reject that price and be in control of the day. So it ended up being upper wick and lower wick the same size, and it is an indecisive candlestick. And we're going to have to watch tomorrow how we break. A break of 234.57 will be bullish, and a break of 233.08 and 232.88 will be bearish. And interesting that the volume was increasing, as usually you see decreasing volume when the price range decreases, but we'll have the middle Bollinger Band resistance and the 50-day resistance to be watching as well. So the bears are still in control. It was up to the bulls to prove to us, and they did not do that. So they're going to have to get over these resistances on these moving averages in order to do so from here. The weekly time frame, we are seeing a lot of resistance in the low 234s, and that's where these exponential moving averages are lining up, 233.94 and 234.07. So we're definitely seeing resistance there as we are back testing these resistance levels after losing them as support last week. So if we cannot close above 234 by the end of this week, it will be a back test and a rejection from those levels, and we will see the bears remain in control of the daily time frame. IWM saw a bit more strength compared to SPY, and it did break a little triple top. Earlier in the day, we had a triple top in the 135.30s. Bulls broke that, and we saw a move up to 135.46. So the bulls have a little bit more momentum, an increase in bull volume, and close up near the high. And in order to break the daily trend to favor the bulls, we have to break 136.92. That's still a lot of work for the bulls to do. And because we broke to that lower low, we are anticipating a lower high and a rejection from 136.92. The key support is now down at 133.66. Bulls have some short-term momentum, but I would be scouting a bearish entry, looking for a lower high compared to 136.92. Weekly time frame, a lot of choppy back and forth here, very tight Bollinger Bands, and we're going to be watching. Really, the Bollinger Bands here are acting as support. 133.68 is that lower Bollinger Band. It's actually 133.17, excuse me. So that is still holding the price. We have tight daily Bollinger Bands, and we are going to have to see a clear break of the lower high daily pattern to shift momentum back to the bulls, because it has shifted to the bears by the end of the last week with that bearish close. QQQ also seeing an attempt to follow through, but seeing weakness. The middle Bollinger Band, 131.47 is resistance. Upper wick rejecting from that level, and 3 days in a row rejecting from that level, 131.47. So upper wick, some profit taking. Potential bear flag. We know that bear flags are more likely when we see a dump and then the inability to get over exponential resistances, and we're rejecting from the exponential and the 20-period resistance. So there is a potential that it is a bear flag. We would have to see a break of 130.95, the low of today, tomorrow, in order for that to increase the odds even more that it is a bear flag. And the bulls, if they can close over the daily middle Bollinger Band, the odds of that being a bear flag are much less likely. So 131.47 is that middle Bollinger Band to be watching. The weekly time frame on QQQ still holding exponential supports on the verge of a bearish MACD cross. And if we lose these exponential supports, we're looking down at 129.40, but the bulls are still holding on the weekly time frame as of right now. So it's all up to that middle Bollinger Band. A lot of resistances that these names have to get over in order to prove that the bulls are showing back up after the bears proved themselves last week. And we'll see if they're able to do it tomorrow. We'll check back in after the close. See you then.